And let me share screen. Okay, you see the screen share?
I do. I see your lesson 1.
Okay. And I just plan to go through these quickly and say, little things. I won't go into all the detail about it because obviously we don't have time, but can't get there. Okay. The laws we're looking at are internal revenue laws. Congress passes the law, the IRS writes regulations that interpret the laws, and the courts issue rulings that clarify the laws. And then we talked about private letter rulings that are not a precedent. If you look at one of those and see that you got a similar situation, you can't rely on that before the IRS to say, well, here's how you did it for this particular taxpayer. A minister. The IRS calls a minister someone who is duly ordained, commissioned, or licensed, and who is engaged in the administration of sacerdotal functions on the conduct of religious worship and the control, conduct, maintenance of a religious organization under the authority of a religious body constituting a church or church denomination. And the courts we talked about have added the additional point that they are considered to be a religious leader by your church or parent denomination. It's not in the regs, not in the law, but it's in the courts as a factor they have chosen to use. Sacerdotal functions, we talked about officiating at weddings, funerals, houses of mourning, clearly fall within the phrase sacerdotal functions. Authorized to administer sacerdotal functions, administered ordinances, baptism and Holy Communion, presided at marriages and funeral ceremonies. Those are basically the functions that a minister does, or what's called sacerdotal functions. The court has 5 factors they considered. Do they administer the sacraments? Do they conduct religious worship? Do they control, conduct, or maintain a religious organization? Are they ordained, commissioned, or licensed? And are they considered to be a spiritual leader? That was in a 1989 case against Knight. Their status is that ordained, commissioned, or licensed is required. The preponderance of evidence on the other 4 items determines if one qualifies as a minister. Then we talked about what about the church, which has no ordaining, commissioning, or licensing body. And we looked at the court cases, 1993 Reader case, which said that duly ordained, commissioned, or licensed did not depend upon the timing or the fact of ordination, but instead depended upon when he assumed the duties and functions of a minister. The Ballinger case in 1984. Not all churches, the court said, not all churches or religions have a formally ordained ministry, whether because of the nature of their beliefs, the lack of denominational structure, or a variety of other reasons. We interpret Congress language providing an exemption for any individual who is duly ordained, commissioned, or licensed to mean that the triggering event is the assumption of the duties and functions of a minister. And then we talked about the 8 examples of services performed by ministers in the exercise of their ministry: the performance of sacerdotal functions, conduct of religious worship, administration of maintenance of a religious organization, administration or maintenance for religious organizations, internal agencies, performance and teaching and administrative duties at theological seminaries, services performed by a qualified minister as an employee of the United States, other than a chaplain, or a state, territory, or possession of the U.S., or a political subdivision of any of the foregoing, or the District of Columbia. So number 7, all services performed by a minister in the conduct of religious worship, administration of sacerdotal functions, or control, conduct, and maintenance of an organization operated as an integral agency of a religious organization. And number 8, and a service performed by a minister pursuant to an assignment or designation by his church for an organization which is neither a religious organization nor operated as an integral agency of a religious organization. We gave examples of an author who is a minister, who is a chaplain, who is a minister, a chaplain not in the armed forces, a church administrator, a parachurch minister, or a teacher and administrator. And then we talked about parachurch, who is something that is an organization outside the church, which seeks to provide the ministerial functions through means other than church. We talked about World Video Bible School and Church of the Lord's Way, Gospel GBN, as long as those types of work were independent of a local congregation or local eldership. And then we talked about people who would not be considered ministers. Counselors were the 2 examples that we had, and both the IRS letter rulings based in 91 and 92, the minister spent 50% of his or her time in counseling, and only 5% conducting duties such as conduct of religious worship or performance of sacerdotal functions. So the counselors in those situations generally are not considered ministers. And that was what we did for the first class. So let me stop the share there. Let me delete that one. Let me.
Roger, will the test be tonight or will it be?
I will give you a test tonight, and I will ask for it to be turned in by sometime Friday.
Okay.
So, and it's 10 multiple choice and 10 true false. They're actually opposite. They're 10 true false, 10 multiple choice questions.
Okay.
And let's go sharing again. Okay, you see the share now?
I do.
Okay. We talked about self-employed or employee, and the IRS stance is that all ministers are employees for income tax reporting purposes, but are self-employed for Social Security purposes. As such, ministers should be issued a W-2 instead of a 1099. Then we looked at a sample of the W-2. Hasn't changed dramatically since 2016. And in this case, we said this minister made $70,000, of which $22,500 was housing allowance, $47,500 was wages, salaries, and tips. So it shows something in box 1, wages, salaries, and tips. We showed something in box 2, box 14 rather, the housing allowance. And we showed something in box 16 for the state purposes. Now we stated as we did that it's up to the church if they want to, they can withhold income taxes and give it to the IRS and report it on the W-2 as well. So the only boxes that would be possible to have dollars in them for administer on the W-2 would be box 2, box 1, box 2, box 14, and box 16 and box 17. Or 18, 19, 20, if they were in a state that imposed local taxes, they may have something there as well. Then we talked about whether the minister pays all his Social Security or pays only half of it, and whether his wages go on line 7 of 1040 or Schedule C, and his expenses go on Schedule A or on Schedule C. For a W-2 person, they should go on Schedule A, except that in 2018 through 2025, we don't have miscellaneous itemized deductions showing on Schedule A. And then there's fringe benefits being tax-free or they're taxable, limits on which retirement plans are available. And if you're self-employed, you bear full liability for misconduct. If you're an employee, your employer generally shares in the misconduct liability if such happens. So we talked about how status gets determined. The IRS has 2 different tests, a 3-factor test and a 20-factor test. The tax court has a 7-factor test. The Supreme Court has a 12-factor test. And the income tax regulations also include a corporate officer test. The 3-factor test look at behavioral control, financial control, and the type of the relationship. And all these tests look at the degree of control and the degree of independence of the parties. So if the employer tells you when to work, where to work, how to work, and if you're trained by an experienced employee, if your worker services are integrated, all these things are in the 20-factor test. Must your services, must the church tell you when you must service, when you must render the services, and must they be rendered by you? Does the church hire, supervise, or pay assistants to assist you? Is there a continuing working relationship between the church and the worker? Does the employer establish set hours of work? Must the worker devote full time to the church's business? Must the worker perform his duties on the church premises? Must the worker perform services in an order or sequence set by the church? Is the worker required to submit regular oral or written reports? Is the worker paid by the hour, the week, or the month? Does the church pay the worker's business expenses? Does the church furnish tools and materials for the worker's use? Does the church furnish all necessary facilities and equipment and premises? May the worker realize a profit or suffer loss as a result of his services? Does the worker perform services for a number of other organizations? Or does he only work for this church? Does the worker make his services available to the general public? Can the church dismiss the worker at any time? Can the worker end the relationship with the church at any time without incurring liability? And then we talked about the various court cases. And we saw the court cases, Alford, Shelley, and Green, were all self-employed. So we looked at greater detail of those. The Alford case, he was an ordained minister of the Churches of God, Assemblies of God, rather. His status as self-employed was determined by the lack of control of the local church over his activities, his supplying of the furniture and equipment used in his daily function, in his setting of his own schedule. In the Shelley case in 1994, a Pentecostal holiness minister hired for his specialized skills and style, chairman of the church board with the authority to appoint members of the board, was not supervised or evaluated. He paid for his own continuing education, used his own library, so the court held that he was self-employed. And in the Green case in 1996, an Assemblies of God foreign missionary raised his own support, hired and paid others to assist in raising support, decided where he would establish his ministry, decided what services would be available through his ministry, decided when he would leave his ministry. So all those cases where they were self-employed, they exercised a lot of control over the decisions themselves, as opposed to the church exercising the control. We also have probably some self-employed situations. If a guest speaker, if you're guest speaker for a gospel meeting, a lecture series, PTP, GNP, forgotten what the acronym is, gospel broadcasting, GBN. If you do those services, if you provide services directly to members for weddings or funerals, or if you are an itinerant evangelist, where you just go somewhere different every few weeks or every other week or every month or something, you may be self-employed in those situations. But remember that the IRS will always claim that the minister is an employee for income tax purposes, and most ministers will have a mixture of employee and self-employed income. And we talked about the Revenue Act of 1978, giving a possible safe harbor under Section 530, and a voluntary classification settlement program that was started by the IRS in 2012, still ongoing, that if you have been getting a 1099 for a church and they want to change you to a W-2, you could qualify under this voluntary classification settlement program. So,
Roger, let me ask you a question.
Yeah.
With that itinerant evangelist, due to the fact that they move around from place to place, is there a honor system where, because you're collecting money and it has to be an honor system, because if you're not honoring, saying that you took in X amount of dollars, you can walk away without even claiming that money, right?
well, you could, but I would think most ministers are
Doing the right thing.
doing the right thing and honest enough to claim whatever they make.
Right, because the reason I asked that, I have a friend and he is an itinerant evangelist. He's not my friend, but my friend knows him, right? And so they're taking lavish trips. He's buying his wife expensive gifts. So that's why I asked, is it an honor system? Because I know you have to be honest to God about what you're doing, but some people just might not do the right thing. And I think he's one of those persons that may not be doing one of the right things.
Most churches, if they pay any individual over $600 a year, would send 1099 to those individuals that they paid over $600 a year. Even if they're, if somebody comes in, holds a GSOP short course for us at Piedmont Road, and we pay him over $600, then we're going to report that and give him a 1099 for that.
Okay.
The failure to do that, to report And I don't know that I've heard of the IRS going in and auditing construction companies or something like that. I've not heard of them auditing a church
Right.
for that purpose, to see
Okay.
if they do 1099s appropriately.
Well,
Uh,
he's not actually per se under a church. He just says he's a minister and he goes about from house to house and he conducts services.
so he's conducting services in a local house, not in a church building.
Right. He'll go from house to house. Whoever
Yeah.
will allow him to come to their house, that's where they will have their services.
It's basically, he's on the honor system. Now, the IRS can audit them. And if the IRS does what they call a revenue audit,
Mm-hmm.
they will ask for his bank accounts,
Oh,
and they will add up all the deposits to his bank accounts, and they will add up on his tax return all that he reported as income. And if there's a difference there, they will ask him to explain the difference.
okay.
But that, I mean, he's got to be caught. Now, the IRS does have what they call whistleblowers.
Mm-hmm.
So somebody could blow the whistle on him and say, I don't think this person's reporting all his income. And if they investigated and decided that was the case and audited him, then the whistleblower would be subject to a reward, generally 10 to 15% of what the IRS recovered from him as the whistleblower.
Okay.
So that's their encouragement to have people that know about situations tell them about it so they can find
Okay. I'll pass that information along.
them.
Thank you.
Okay, we talked in the third lesson about electing out of Social Security and Medicare. A minister being self-employed does not pay Social Security, does not have Social Security withheld. So we saw on his W-2 that box 3 and box 4 and box 5 and box 6, which are Social Security wages, Social Security withheld, Medicare wages, and Medicare withheld, are blank on a minister's W-2. So a minister is self-employed. He pays SECA, Self-Employed Contribution Act, instead of Federal Insurance Contribution Act taxes, and pays it at a full 15.3%, whereas an employee gets half of it withheld from their pay, and the company pays the other half. 6 requirements to exempt out of SECA: to be ordained, commissioned, or licensed, to be by a tax-exempt church or convention or association of churches, file a timely election on Form 4361, notifying the ordaining, commissioning, or licensing body, receive approval of Form 4361 from the IRS, and not having made a disqualifying election. And we looked at what Form 4361 was. We looked at the election out, the certifications you make if you file Form 4361. And the first paragraph certifies you're conscientiously opposed to the acceptance, not that they have it, but the acceptance for services I perform as a minister or member of a religious order, non-invited poverty or religious science practitioner, acceptance of any public insurance that makes payments in the event of death, disability, old age, or retirement, or makes payments toward the cost of or provides services for medical care. And items to note, it's the acceptance that you're opposed to when you sign it. The exemption is only for income from services performed as a minister. You participate in private insurance is not prohibited. And the due date would be the second year in which you earn more than $400 in self-employment income, of which any portion is from ministerial services. So if you earn $400 this year, $400 5 years from now, that's the second year, and you had to file Form 4361 by the due date of that return, including the extensions of the due date. And we talked about opting back into self-employment, that Congress has allowed that for 3 different occasions: on 1977 returns, on 1987 returns, and on 2000 or 2001 returns. And these, along with filings prior to 1968, are the disqualifying elections we talked about on Form 4361. Then we talked about how can you prove that you filed it. Wayne Jackson has an article that we talked about, may a minister opt out of Social Security, referenced an article by Dan Wade in January 2009, Gospel Advocate. And we talked about Eid and 1991 court case, where the federal court in Virginia held that receipt of the application approved by the IRS is a perfunctory administrative task and is not required for the exemption. And if he was able to convince the jury he had filed, and the court upheld his exemption. We also talked about the IRS audit manual gives 2 chances, 2 opportunities that you may, if you can go to the IRS Service Center where you ordered it, where you exempted it, and you can order a transcript of the year your exemption was there, then it may be on the IRS manual or maybe on the IRS website. Or that if you can call the Social Security Administration in Baltimore and ask them to provide an example, or provide information about your exemption. So that's what we did for week 3. Okay, week 4. We talked about income for a minister. We talked about salary, retirement gifts, special occasion gifts, purchase of church-owned property for less than fair market value. If the church owned a house, a minister's house, that they let you buy, pay less than fair market value, then salary would include the difference in fair market value and what you paid for the house. Reimbursements not paid under an accountable plan, bonuses, if they paid half of their half of the Social Security tax, the personal use of the church-owned vehicle, if they forgave a debt for you, if they paid for your spouse to travel with you, if they paid health insurance premiums, and that one's got a question mark because it depends on what's involved in that, whether it would be salary or not, or if they made a below market rate loan to you. We talked about tax-free fringe benefits, a housing allowance. We said that that's taxable on it's not tax, it is tax-free for income tax. It's not tax-free for SECA, self-employment tax. Gifts, we talked about those. And you remember I told the story about it, PTP. I passed a guy, shook hands with him, passed him a $50 bill. That gift, and due to the intent of the donor, the intent, I was the donor, he was the recipient, I intended that it be truly a gift to him. So it was a gift, it was not income to him. We talked about group term life insurance for less than $50,000 of group term life insurance. We talked about scholarships can be tax-free. We talked about employer paid health insurance premiums can be tax-free. Tuition reductions can be tax-free. Lodging for the employer's benefit can be tax-free. We talked about $5,250 a year that your employer can pay for your educational assistance. If the employer provides daycare or childcare and you let your children go on a non-discriminatory basis. And we talked about de minimis fringe benefits. And we talked about here where gifts, it's purely in the intention of the donor that the gift becomes a gift. We talked about some court cases, Banks in 1991, where the gift made special occasion gifts to the minister, and yet they did it on a regular basis and gave him over $40,000 a year. And those were considered by the court to be income to him. Godwin in 1995 considered to be income because it, in that case, comprised from 50 to 100% of all his income. So the court wouldn't let somebody just get gifts and report those all as gifts. They held that some of them were income, or all of them could have been income. Under Shaw in 1949, under Munch in 1954, Kavanaugh in 1954, and Abernathy in 1954, retirement gifts to ministers could possibly be tax-exempt gifts. And those could even be recurring monthly gifts. That retirement gifts could be gifts and not income. However, Section 102C of the Internal Revenue Code, any amount transferred by or for an employer to or for the benefit of an employee cannot be a gift, with two exceptions: an employee achievement award or a de minimis fringe benefit. We talked about the employee achievement awards. Can't be cash or cash equivalent, so they can't give you a gift card. Can't exceed $1,600 in value. Can be only awarded every 5 years, and must be for a length of service or a safety achievement. So if every 5 years the church wanted to reward you with an employee achievement award, they could give you something worth up to $1,600. But it could not be cash or cash equivalent. So if we talked about if the church pays their half of the self-employment tax, Social Security, Medicare tax, that it's considered income and taxable compensation to the minister. Okay. We talked about if they try to get out of it by signing their income and the courts say no. And we also talked about unreasonable compensation. We talked about the Jim Baker case, and he was held to be reasonable compensation for him. The courts deemed to be 133 from 1984 to 177 in 1987, and yet he made from 84 through 87 $7.3 million. So he had a lot of compensation that was unreasonable in their view. Finding of unreasonable compensation subjects the minister to 25% excise tax. And if he doesn't pay the excise tax timely, subject to a 200% tax under the intermediate sanctions rules. And then we talked about the Truth Tabernacle case, where this guy, and let's go back. The church received annual contributions of less than $20,000, used all funds to pay its mortgage, its utilities, and repairs. The only compensation the minister received was free use of an apartment and a vehicle. And yet they said it was unreasonable compensation and took away the church's tax exempt status. Now, the church sued him and got a tax exempt status returned, but I didn't understand that case. Still don't understand it. Variety Club Tent number 6 charities tax court case in 1997, where the officers embezzled money, and that did not constitute annulment. However, the rental of a building from an officer would constitute annulment if the rental was not reasonable. And these are all the things we talked about: de minimis fringe benefits, occasional use of a copier or printer, holiday gifts of non-cash property with low fair market value, coffee or soft drinks furnished to the employees, local phone calls, subscriptions to the professional publications. Meals or lodging furnished for the benefit of the employer, employer provided educational assistance, limited $5,250 a year, and the employer provided dependent care. Premiums for health insurance paid directly to the insurance provider are tax-free. Premiums for health insurance where they reimburse the employee are only tax-free if proof of payment is required. And tax-free status depends on the church having a written plan. Written plan must incorporate recorded commitment in minutes, commitments, certain rules and regulations governing payment, communication of the rules to the employees as a definite policy called an accident or a health plan and operated on a consistent basis. If you're given a 1099 NEC instead of a W-2, then the church is calling you self-employed, and any health insurance premiums paid by the church are taxable income to you. We talked about the church plan. That's what we saw earlier, all the rules for that. And then a small employer, we talked about those definitions under the Affordable Care Act, that having less than 25 full-time employees on average earn less than $50,000 a year and pay premiums for health insurance qualifies a small employer. Section 125 cafeteria plan benefits could include accident health benefits, health savings account, adoption assistance, dependent care assistance, group term life insurance. So that's what we did on lesson 4. Okay, lesson 5, we talked about what expenses could be covered by a housing allowance. Monthly items could be monthly rent or mortgage payment and the interest. The interest would also be deductible on Schedule A. Utilities, electric, gas, water, sewer, cable TV, telephone, firewood, etc. Other, pest control, household cleaning supplies, maintenance, lawn service. Annual items like homeowners insurance, coverage against fire, theft, liability, real estate taxes. We talked about taxes, also deductible on Schedule A. Insurance on the furnishings, umbrella liability insurance, homeowners association or condo association dues or fees. We talked about other items that are not monthly or annual. Down payment where you buy a new house. With down payment, the real estate commission, the attorney's fees, the escrow fees, points origination fees. If you bought new furniture, bought furnishings, appliances, plates, utensils, cookware, cups, etc., bought new carpet, new curtains, new drapes, new linens, pictures, wallpaper, paint, keys, did repairs, did maintenance, did improvements, did landscaping, did fencing, did special assessments for streets, sewers, sidewalks, etc. All those could be covered by housing allowance. Then we talked about the rules for the housing allowance. They must be in a written agreement prior to any monies being designated. Allowance cannot exceed the reasonable compensation of the minister. Deduction cannot exceed the fair rental value of the furnished home versus utilities. And the amount of the deduction of the allowance can be adjusted by the mutual agreement of the parties at any time. So we talked about if you're going to buy a new house, be better to buy it earlier in the year because you could then have that covered by the housing allowance, where if you bought it in December, you might not have enough time and enough dollars to have that purchase monies included in the house, in the housing allowance. Excuse me a minute. We talked about their 3 numbers. The housing allowance could be the housing allowance amount, the fair rental value of the house and furnishings, plus the utilities, and your actual expenses. Whichever amount is lowest determines the housing allowance you can claim on your tax return. So I told you that a lot of the people I deal with have housing allowance estimate that they file annually set way high. So it's never the lowest number. So fair rental value of the house, furnished, plus the utilities or actual expenses are going to be the lower of those 3 numbers. It's your responsibility as the taxpayer to make the comparison of those 3 and to make the lowest one your housing allowance deduction. And then we talked about housing allowance for retirees. Retirees, generally, if they're coming from 403B accounts, B7 or B9 retirement accounts, can be housing allowance amounts. Spouses of the deceased ministers are not allowed to designate a portion of retirement income as housing allowance. Then we talked about housing allowance being the court case that was filed by the Freedom from Religion Foundation, and a housing allowance on more than one house, which was a court case about 2017, that the court held that you could only have housing allowance for one house. That's what we did on week 5. So for week 6, okay, we talked about business expenses. Once again, if you get a W-2, you're considered an employee. If the expenses are reimbursed under an accountable plan, they're not income to you. For 2003 through 2025, unreimbursed expenses are not deductible. But prior to 2018, apply again unless Congress changes the law in 2026. Those things that got reimbursed to you that were not deducted under an accountable plan, were not reimbursed under an accountable plan, that you could claim those expenses on Schedule A subject to a 2% limitation. If you get a 1099, you're self-employed, your expenses are deductible on Schedule C. We talked about business use of a personal vehicle, commuting not being deductible or reimbursable, a choice being made in the first year of vehicle use. Now note, that's not the first year you bought a vehicle, although it may be. It's the first year you use it for business. Actual expenses, you still have to have track your business mileage, so you know how much of your mileage that year was business use versus regular use versus non-business use. And you take your actual expenses times that business use percentage. That's how much you can deduct. Or a standard mileage rate. 22, it was 58.5 cents a mile through June 30, 62.5 cents a mile July through December. 23, it's 65.5 cents a mile. Parking fees and tolls are potentially deductible or reimbursable. Commuting mileage, we talked about if you go from your house to a home to the church office, which is at the building, that is commuting. If you have an office in the home and the church does not supply you an office in the church, then any mileage from your home, if you're visiting or something or doing something for work, mileage would be incurred from your home office to somewhere there. And we talked about if first stop of the day is somewhere other than primary work location. So you stop by hospital to see somebody and then you went to the office. Then commuting from the home to the hospital, then it's business mileage from there to through the day until you get ready to go home. We talked about combining business personal travel in a single trip. Allocation must be made between business and personal as percentage of time, number of days, etc. But the deduction or reimbursement cannot exceed the amount you would have incurred for only business travel. When counting business days versus personal days, travel days and weekends days are not considered. And if your spouse or your children accompany you on a business trip, you may only deduct the expenses incurred for those who were involved in the business. If your wife is going with you, but she's not speaking, she's not doing anything other than listening to you and keeping you company, then no allocation for her. If no additional cost was incurred, you may deduct the full amount. For example, if you go by car and your wife and your kids go with you, you're going to pay the same whether you go by yourself or they go with you. So, you know, but if you fly, you're going to pay some additional amount for every additional family member that goes. So you can only deduct the family members that were involved in the business. You cannot deduct the family members involved in the non-business. Meals and entertainment either have to be directly associated with the active conduct of your business or associated with the active conduct in order to be deductible or reimbursable. And we talked about directly related. Books and subscriptions. This can be reimbursed by the church, but if they reimburse you, they own the items, you don't own them. Now, they may declare that when you left, that they make a gift of those items to you, so you don't have to leave them behind. But if they reimbursed you, then they own the books and subscriptions. If you have taken depreciation on them, capitalized and depreciated over 5 years, or Section 179, taking that, and you didn't ask for reimbursement, then you still own them and you can feel free to carry them with you. We talked about education expense, which is required by your employer or required by law or regulation to keep your salary, status, or job, or which maintains or improves skills required in your present work, or deductible unless it's required to meet minimum educational level to qualify you for your trade or business, or if it's part of a program of study that qualifies you for a new trade or business. Office supplies and equipment. We talked about these being deductible or reimbursement, or if they're purchased for use in your job, or if they're required by your employer to fulfill your job duties. You had to keep receipts. The IRS rule is anything over $75 you had to have a receipt for, and you had to document the business purpose regardless of the amount. And office in the home. It must be regularly used for business. It must be exclusively for business. Doesn't have to be the whole room. It could be a portion of the room. Has to be the convenience of the employer. It has to be the principal place of business. If the church provided you with an office, you generally cannot show that you were doing this for employer convenience. And if you fully excluded all your housing costs under housing allowance, you don't have any expenses to deduct for office in the home. We talked about specialized clothing, and the key point here is that suits the minister may wear are not specialized clothing. They can be adapted for use as a general rule for normal everyday wear, so they don't qualify as specialized clothing. We talked about telephone calls, telephone lines. First line into your home is not deductible. Any line that you did beyond that, depending on the business use, could be deductible. Cell phone provided by the employer is not income to the employer if there are substantial business reasons for provide the employer providing it to you. Then we talked about the decent rule. You may deduct ordinary and necessary business expenses. However, if your compensation included a housing allowance, which is exempt from income tax, that portion of the expenses, if it was a third, if it was 50%, if it was 20%, whatever it was, that portion of your ordinary and necessary business expenses is not deductible. That's a rule that the courts came up with, tax court came up with in 1964. The IRS includes it in their audit guide for ministers. So if you're not doing this, you need to find tax software that allows you to do that, or someone who does your tax returns that will do this properly for you. And decent rule does not apply to calculating self-employment income, since housing allowance added back for this purpose. Decent rule does not apply to expenses reimbursed under an accountable plan. And the decent rule does not apply to other types of tax exempt income, only to housing allowance. And that's when we said, any questions on lesson 6?
No, we're good.
All right, then let me stop recording.